Hello everyone, welcome to Elliott Wave Analysis.com YouTube channel. This is Henry. Today is Tuesday, March 14. The time is around 2:30 a.m. GMT. So today, guys, we are going to look at the chart of the FTSE. A lot of things happen in just the past 72 hours since last Friday, right? So obviously, some of the regional banks got bailed out, and we got a reaction lower in the indices and stock market. So we're gonna take a look here quickly in the FTSE. So we can see right here, we ended with 1. This is a cycle degree. Okay, so now basically we are doing a wave 2 pullback, and wave 2 pullback, as you know, should be in is corrective and is in a 3 waves or in 3 swing or 7 swing, but it is a larger degree correction, so don't expect the correction to be short-lived. Here we are still within the A leg. All right, we're still within the A leg of wave 2, and within the A leg it should be a 5 waves down. So that's why you see a wave 1 here, a wave 2 here, and now still within a wave 3 in the intermediate degree, right? So basically we're gonna have a 5 waves down in the intermediate degree like this: 1, 2, 3, 4, 5, right? 3, 4, 5, and we are now still within wave 3 right now. We are currently within this wave 3, and then after that you got a 4 and a 5. So once you finish the 5 waves down, so here in the 1 hour time frame you only can see 1, 2. We're still within wave 3. Within wave 3 it further subdivides into another 5 waves in the minor degree: 1, 2, 3, 4. So when we finish 5 in minor degree in the red here, we should be also finished with the 3 in the intermediate degree, and then get a rally in the 4, and then another leg down in the 5. So once you finish a 5 waves down in the intermediate degree, you will then finish the A leg, right? The A leg of wave 2, right? And then after that you will get another B rally, and then C leg down again before you finally finish wave 2. So I think it's safe to say that in the foreseeable future you should continue to see for the downside, right? And so it's a larger degree correction, still with the main larger time frame bullish, right? Of course, indices in the largest time frame is always going to be bullish, but now we're doing a larger degree correction. So let's zoom out a little bit to get a context of what kind of correction are we looking at here. So let me copy this wave 1 on the daily time frame so that wave 1 is here. So we got two options here, guys. Okay, we got two options. Let me zoom out. You can see this is the COVID-19 low here, right? Everybody knows that. This is March 2020. That's the COVID-19 low, when we got a huge scare sell-off, and then basically after that we are printing money and so on. So that's why we see massive rally. Now this wave 1 here, at minimum, you see the reaction lower here. This is an impulse, right? That's what basically what we are showing here. This 1, 2, 3, 4, 5. So at minimum we should be at minimum, okay, correcting the cycle from October, right? That's bare minimum expectation. We should be looking to correct that October cycle. So if you look at the October cycle here, you can count it as a 1, 2, 3, 4, 5 ending with 1. So at minimum we should be getting a 5 waves down, a rally in the B, and a C correcting October 2022. But there is also another option in which you could be also ending the entire cycle from 2020. So you could in fact be calling this 1, 2, 3, 4, and 5 as well. So not only that the 3 is pulled back, correct October 2022, there is also another option in which you finish the entire 5 waves up from from March 2020. So this is almost like a 3-year rally, right? It's non-stop rally if you think about it, from March 2020. Now we are in March 2023. So now we could in fact be correcting that 3-year rally. Now if that's the case, then you know how it is. If you are correcting 3-year rally, you technically has this much space to correct, right? Sorry about that. Not sure what happened here. Right, so if you're correcting the October 2020 here, you technically have so much space to correct, right? Because you are correcting this entire rally. So the correction can go down all the way, whatever it wants to do, as long as it doesn't break below this the beginning, right? So it can go 50% correction, 60%, or even 80%. So you got plenty of space to go down if indeed it ended the 2020. But like I said, minimum, at bare minimum, because of the decline here looks impulsive, you should be at least correcting the cycle, right? If we are correcting that 2022, that itself is also suggesting for the downside, at least until you can see a 5 waves down from here, a rally in 3 waves, and another 5 waves down. That is if it is only correcting the cycle. If it is correcting the entire cycle, then the correction can be a lot bigger, right? Not only that you will finish with just a 3 waves pullback here, because this is a shorter degree 3 waves pullback, but the 3 waves can be something like this. You can have a much bigger 3 waves and still be corrective, right? You can have a much bigger 3 waves like this before going higher again. Okay, so that's just for food of thought from the larger time frame, but for the purpose of our analysis, which is short term here, it's very simple, right? It's very simple. You should expect more downside. So if there is any rally, right? I mean, rally can happen anytime, any moment. If there is any rally, the rally will continue to fail in the foreseeable future. At least when we're talking about this week, that should be enough, right? For everybody. For this week, any rally should fail in the sequence of 3 swing or 7 swing and continues to go down. Alright, so if you do want to get regular updates on FTSE or any other indices, stock, ETF, Forex, cryptos, and so on, we have 14 days trial, and the link is in the description of the video. So I'll see you all again next time. Have a nice day, everyone.